Mic check. 1 2 1 2. What's going on, everyone? This is Jordan with Conquer Trading and Investing. I hope you all are well and doing great on this Tuesday, on this Taco Tuesday, Turnaround Tuesday. In effect, will it last? Where are we looking at? What is happening next? We're going to take a look at it all, right? Jerome Powell this morning speaking over in Paris. He's talking about, what do we got? We'll bring it up over here, the title of it. It's I think we have central bankster shock. And everyone is concerned about what's going to come out of the central bank speaker and whether or not it's going to derail any type of semblance of a bounce that we have in the markets. And the markets have been bloodbath straight down. And all of a sudden we see a little bit of a green in our screens. And it's, don't get me wrong, it's nice. It's hopeful, right? But at the same time, everyone is looking for that to be erased and the bloodbath of red to begin right again. We have PTSD of central bankers, and that is part, by the way, of their intervention. That is exactly what they want. They want everyone right now scared and on the defensive because it tightens markets. They are winning. And I just think that everyone is reacting rightfully so. But the main event was last week. It was Wednesday. It was the FOMC meeting, and it was the press conference that Powell got to give. That's when he was on the center stage. The world was watching because the world has to watch what these banksters do and say in secret and then tell us what policy is going to be. This looks like it's nothing more than, let's call it a non-event. Let me go ahead and jump over to here just so you could see Powell, and then you could see the speech that was had. It was opportunities and challenges of the tokenization of finance. What I think it really was nothing more than laying the groundwork for the introductions of the CBDCs. In this, they're talking about the risks that DeFi tokens represent to the financial system. They're posing the question if a central bank digital currencies will migrate that risk. So I think it's a breadcrumb, and it's a breadcrumb along the lines of what their future plans are. It wasn't until, I think it's 2018, it could have been 2019, that I read my first white paper directly from the IMF on the central bank digital currencies, that I understood what their plans were. I saw something these past few days where someone was pointing to them first releasing in 2015 what their plans were. I was interested to learn that because, the first I heard of it was early, sometime in 2018, 2019. And you could see that they're progressing. We all know 2013 is when we are potentially looking at the Fed Now system to be launched, and they are making their way. Boom, 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 boom. I wouldn't be surprised if countries like Australia, Canada, those that seem to be the bedrock right now of the World Economic Forum are amongst some of the first. We will be waiting and we will be watching. Bum, 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 bum. We have a nice session prepared for us today. We're going to be looking first at some Bitcoin. We're going to be looking at some future expectations of Bitcoin. We're going to be looking at current position of Bitcoins. And then I want to take a look at things like the dollar. And it's interesting to note, you remember that we went ahead and set these channels off just last week together. And you could see how well this is being respected in real time since after the breakout, you had a retest. Price was able to pump up. And since then, two tests of that broken resistance now acting as support. The dollar taking off today, it's off right now. It was off a little bit more. I mean, it's off 0.18%. And the markets are happy and the markets are rallying. It was off like maybe, I don't know, the lowest I saw it was 0.4% or 0.3%. And I was just imagining, could you imagine if the dollar were able to come off back towards, I don't know, forget the June lows when the dollar was 104, 105. What happens if it were to come back down towards 108 or 109? We might see a decent rally across markets. Now, I don't know what would, let's say, what would be the cause of the dollar at this particular moment coming off. There are people talking or giving the let's say backseat analysis that yesterday Jeff, excuse me, I will mispronounce his name. Jeff Gondilak said that he was stepping in to buy bonds, and that people thought that, well, we got a big player in the market that's at least willing to jump in front of a freight train and buy bonds, and that might be a good signal. And here we are again as the 10-year looks to print a new or is testing the 12-month high. But more importantly, I personally think, these are my own opinions, is that there wasn't a time that I could look back and remember 18 months ago, or even forget 18 months ago, go back to last summer when we were talking about here all summer long about this trade resuming out to the upside, or the big technical breakout we had. We had the breakout over here. There wasn't a point in time where Jeff was like, listen, right now I'd be very cautious. I would not be, I don't expect him to say, look, you should sell bonds. He's the bond king after all. But maybe he'd be like, well, I would be very cautious right now. So again, I don't really think that there's much of that there or anything like that. All right, let's get into it a little bit. Great morning, Brian. Great to see you. What if the massive pump and dump by the Fed to curb the effects of the recession? What if it's a massive pump and dump by the Fed to curb? I don't think that what we're seeing right now so far, thus this morning, is anything but a test of the June low going on. And right now, by like the thinnest fraction, that test is holding on to dear life. I wouldn't really think it's more than that. I don't think that the Fed by any means is looking to go ahead and cause any type of relief rally in the market. If they wanted to do that, then Powell could have just simply thrown the market a bone. He could have just came off or give the market some type of hope of any type of dovish posture. That's not what's going on. This is just markets being markets from my own opinion, right? Dean, with these turbulent markets, do you consider a retest, a full inside candle, or just not making that continuation of one side? I think we're talking about the DXY over here, Dean. And I think that we're talking about, we had the breakout occurring right over here. This was, by the way, Sunday morning, right? This was after the weekend opening up, and then Asia opened and the pound just being obliterated. And then you saw after that in real time, you come down to a smaller time frame perhaps, you saw a retest. There's the breakout, a retest. Price came in, so far was not able to resume up. It's so far made a lower high, came back in and has again retested it, and now is bouncing up. Dean, I don't really read too much into it at all right now. I think that what we're looking at is very strong momentum here taking place for a good reason. Whether you want to call it dollar milkshake theory playing out, which I mean, absolutely. Or if you just want to talk about, the tightening taking place out of the Federal Reserve, and it so far and thus far being a lot more aggressive than its counterparts. When I talk about counterparts, I'm talking about specifically the Euro and the Bank of Japan, which have ultra low rates, and you can see the differential playing out. And since March is when it really took off, when the Fed began raising rates. And you come back over here, and I wish I could find March on the chart. And this is the US dollar, Japanese yen, and I'm having a hard time finding where March is. So this is Jordan. I'm on a 2-hour time frame. That's what threw me off. I'm looking at a 2-hour time frame. Please, a little love. Here's March over here, and when the Fed began raising rates, and that rate differential was really exacerbated as the Fed began its tightening cycle, you could see that's where this took off. Now I'm looking here in real time, and I just wanted to point out the pound US dollar, and we saw that Sunday opening, that big sell-off, and you're seeing here a bounce. Now, I could not tell you or give you any type of hint about whether or not we're going to go ahead and roll back over and take out that low. And if we do, I do imagine that the dollar is going to be taking out that high right around 115, if that's occurring. or I can't tell you if for now or for an extended period of time or what have you, if that spike down caused a low. It's really a coin flip. I have no idea. And if you're trading that, I think you're very late. You're trading it into the extreme. I don't know. I wasn't on my radar to watch the pound and for the pound to fall off the cliff. I don't know of anyone who was talking about it ahead of the breakdown and fall. And if you do, those are the type of analysts that I'm interested in knowing of. Please let me know. Euro US dollar too, same and similar situation. I mean, it's just hanging down over here. That's what's going on with the dollar. It's nothing more than that. If the dollar does or is able to give some type of reprieve, and I'm not talking about coming off, 0.18% on the session, but coming off, again, down towards 108, towards 109, we might see at that point what is a bounce in the market or bounce in risk. It's interesting to point out and note that yesterday, a lot of people talking about the title of this video is Turnaround Tuesday, but the turnaround started yesterday in the markets, and you could see that Bitcoin was up on the session. It was up about 2% on the session. Ethereum also following suit. Bitcoin was leading. Usually, normally, when I'm seeing a rip, now this is post-merge. Pre-merge, usually whenever we had any type of risk rally in the markets, Ethereum would be leading. You have to make observations. One observation right now is that Bitcoin is leading this particular rally. Now, could it be because of we're looking at the Ethereum Bitcoin cross being very, very overbought, and we're going to be seeing a reversion on that potentially and possible. When I look at, and I just want to point out this observation to you as we're making observations, when I look at the low off of Bitcoin off the June low, you can see that it's barely above still, right? And this is kind of flat. It's a flat bottom thus far, if it is a bottom. I mean, to date, the low stands. And on Ethereum, it's much different. You can see that Ethereum has actually put in a substantially higher low. And not only has it put in a higher low, you can see over here that test. If you just follow this area of resistance and then focus your eyes on the right, you could see that retest right over there, and it looks and continues to look very healthy. So Ethereum, in a sense, even coming off of post merge, is right now putting in a healthy retest of that bottom. This actually looks a little bit more characteristic of what you've seen past Bitcoin bottoms, whether you're looking at late December 2018 into January 2019 or back into 2014, 2015 area. So that's of note. Bitcoin bottom is a little flat. Yeah, that's pretty cool, Amen Bond. That's pretty cool. That's very interesting, actually. Mark, great morning to hear you. Taco Tuesday on Turnaround Tuesday. Yeah, I don't know what you're disagreeing with. I haven't said anything. I mean, ADD dad, you could be respectful or not, but I don't know what you're disagreeing with. I haven't even begun. So that's beautiful, This isn't Twitter. We're not here to argue. We're here to work together and to figure it out. If you want to add insight, use the comment box. Please go ahead and add it in. But this is not incentivized for argumentation and to take one stance. We're here to work together to view the markets, to learn something each and every day. I know that I am. I know that I am a student of the market, and I know that these past 24 years, each and every day, I'm here to learn. First of all, about myself, know thyself and conquer the markets, and especially about the financial system. These are unprecedented times that we are currently undergoing. We are undergoing monetary reset in real time. It is extraordinarily difficult to maneuver. Do not for a second think that you have the keys. Take that humble stance, work together, and learn from each other. We are looking over here at Bitcoin in relation to the previous cycle, right? And just making the one observation over here. if you are embracing 4-year cycle nature. Now, I do want to preface this. This is coming from someone who had keen, I mean, keen awareness of the 4-year cycle, was able to call the cycle low December 2018. And then not only that, I mean, a lot of similarities were taking place then and now. And I'm not doing this to call a bottom. I have not called the bottom. I have no idea whether or not the June low is the bottom or not. And there's no way I would call it. Just there's a lot of differences taking place now between then and now. And I also don't know whether or not if the June low gets taken out. I mean, that's been my exact posture. If you go to the channel, I put out the video as the June low occurred. So that has not changed, right? And back then, coming out of that into late January, I started talking about why people were still talking about we were looking at $1,500 Bitcoin because the NASDAQ back in 2000, coming out of the dot-com bubble bust, came off X amount of percentage. Therefore, Bitcoin needs to, because of a hyperwave, come off X amount of percentage. And the overall belief in the sector and in the space, and if you were to go to watch any like YouTube influencer channel, they're just talking about this hyper BS and that we're coming down to 1,500 because of something the NASDAQ did and other markets did in the past. And I'm out there and I'm like, you know what? Actually, within a few months, we're going to be looking at Bitcoin 8,400. I mean, it overshot, and by a lot. We went towards 14,000 in 6 months, June 2019. And then we started pulling back, and that was the place we were able to, the whole way up, because of 4-year cycle behavior, was able to stay on top of it. And it's then as well as know when something was wrong. We had the breakdown over here, 53,140. I was looking for especially a nice big blow off top to occur out of this. It's not what happened, but you could look at this and you could say that, well, the market did peak coming off the halving, a line from the halving, approximately the same amount of days. Once again, Jordan, I'm not sure that you should abandon the 4-year cycle theory. Now, I have, and I don't think that the 4-year cycle stands. Nevertheless, I think that people should be aware of it. I think that people should have some type of expectations, because it helps, by the way, whether or not the 4-year cycle plays out according to its nature, or whether you see at any point in time something is different. And now, right now, the risk, by the way, is that we're not going to see some similarities. The risk would be that we see something different, and if something different develops, whether it's to the upside or downside, you want to make sure that you have that awareness to go ahead and manage your risk accordingly. This little line over here, by the way, that would signify an 85% correction from Bitcoin's high, cycle high, 69,000 into the pocket down over here. And in past cycles, you've seen that behavior. You've seen an 84% drawdown from the all-time high to the low. You've seen an 85% correction from the all-time high down to the low. And you can notice also that this line over here, it is just going off the past 2 cycles from the danger zone, right? The danger zone being where price capitulated down over here. If you follow the mouse crosshairs all the way down, you will see that you're starting over here, and then towards this area over here where we've seen, again, price, this is really coming out of it, where price is able to start front running the halving. So this is the danger zone, and that's going through February of 2023. I think the macro right now closely aligns to that being a hot pocket, a danger zone of any type of further capitulation down. It's anyone's guess. Dean, that's a great question. Is it potentially possible? Look, I think personally that, number one, that what we're seeing here is for sure the macro leading the way. If y'all remember, it was very early in 2020 where I deemed that the greatest risk to Bitcoin's bull market was the Federal Reserve and its policy. There were a lot of people looking at things like, for example, Tether and this, that, and the third as being a risk. And the only risk that I see is the central bank policy led by the Federal Reserve. And that's where we topped when the Fed pivoted over here and began the taper. And we didn't go into a blow off top. And it makes a lot of sense in hindsight why we did not go into that blow off top. There's no question about it. Now, going forward, I don't know what happens with the Fed. I mean, everyone seems to be really like, why everyone or the majority missed what happened in this area over here as far as Fed communication and policy. Everyone, getting on board in March and now believes that they have it correctly. I have no idea what is going to happen next. And I have no idea whether or not, for example, worst case scenario, that they're forced to pivot back to actually straight QE, why inflation is in double digits. That would be an absolute disaster going forward, but it could happen. And we're looking at some, again, unprecedented times. We're looking at an absolute energy crisis in Europe as winter's approaching. Everyone is aware of yesterday 2 leaks underground in the pipeline. I mean, obviously that was not an accident. We're now, regardless of the party responsible or parties responsible for it, point being, as Europe was using September, October to really go ahead and fill up their reserves, trying to prepare for winter, that is now, I think situation's going from bad to worse. And you don't know what's going to happen. I don't know what's going to happen. I don't know if they're going to, put down the hammer even harder. And we're just going to keep raising rate expectations. And because regardless of what people believe out there is right now a massive amount of liquidity out there. Now that in an instant, because of contagion, could disappear, but they might be able to continue to tighten a lot further than people expect or expectations are. Now, going forward, it's about 3 years away or less where they need to start rolling over this debt, specifically domestically in the US. I imagine by that point, rates are going to be really low conveniently. I don't know what happens between now and then. What I'm getting at or trying to say is could you paint in your mind a scenario where we see actually Bitcoin make a new all-time high before the next halving in April and March 2024? I'm forced to pivot because we've looked at monetary base total, and we've seen in every single cycle that the main catalyst for the sweet spot of the bull market run in Bitcoin has always been when we started seeing expansion. We've been seeing contraction since November in the overall monetary base total. Once that starts flipping the other way, I don't think Bitcoin will bottom. I think Bitcoin will bottom before then, as it has each and every time. And it's very difficult to get the bottom correct in relation to monetary base total. Nevertheless, once it starts to actually be expanding again, that is when a bull market is going to be happening. I do believe that is a signal that you could tell the average person, for them, this is the time that you really would like, and or should be invested in Bitcoin and or crypto. If that happens before the next halving, it's potentially possible Bitcoin's making a new all-time high. If Bitcoin's making a new all-time high before the halving, are we going to call this a lengthening cycle? I think that a lot of people would call that a lengthening cycle. Now, there are people who really embraced, diminishing returns, lengthening cycle. Ben says that this is not lengthening cycles. I have to agree with that in so much as that we're looking at right now a 75% drawdown. It's hard to say that is therefore the same cycle and not a full-fledged bear market. That from my interpretation, it's a bear market. There's no question about that. If we saw an all-time high at that point, there will be a lot of people who embrace that was really just the same cycle, and this was like whatever wave fork. I don't know how, whatever, but I don't think so. And I think what we're looking at is, more importantly, a new structure. It's a new form of cycles. And again, if the catalyst for Bitcoin going to make new all-time highs was indeed the Federal Reserve, I think it's more appropriate to say that, nope, what we're looking at is a close relationship between the cycle of Bitcoin, the new cycle of Bitcoin, and Fed policy. That would be more appropriate. Now, it is possible that what we see, Anthony, great to see you, my brother. Great to see you. Thanks for being here. Lots of love. It is possible that we see at some point in this danger zone, which is coming through as we already illustrated, and why we have that line over there, that we see not only a test of something like 14 to 16,000, but even all the way down into the pocket. Now, I don't really believe it's possible that we're going to see something like $3,000 Bitcoin. I mean, and I say that with the one qualification that it is the markets. Anything could happen. If you remember, it was only 2 years ago that WTI crude oil traded negative for the forward contract. No one ever thought that oil, the backbone of the whole world, was going down to zero. It did. It's the markets. Anything could happen. But I would give it an extraordinarily low probability that we would see Bitcoin coming down anywhere near 3,000. We'll talk a little bit more why, including the market participants in the market right now, how much money it would take to move the price of Bitcoin X amount of dollars. By the way, rough math, Bank of America estimated when Bitcoin was trading above $50,000, it took $93 million to move the price 1%. So you there have to think at $5,000 Bitcoin, it would take the $93 million, $100 million to move the price 10%, or $1 billion to move it 100%. I can't imagine seeing the price coming down that low. You're looking at, obviously, at this particular point in time, compared to even where we were just what was it, 2020, when we tested 3,500 during the global lockdowns and crisis. We have seen significantly bigger players enter the space, as well as you have a lot of people right now, a lot of retail, who are going to be very, very, let's say, just they're licking their lips, hoping we get down to 10,000 or something like that. Anyway, I attribute it to be a very low probability of anything like $5,000 Bitcoin, but just wanted to throw that out there. I think it's a low probability that we come down and have a full 85% correction. But again, we talked about risks to the upside. The risk to the downside is that we see these June lows taken out in the markets. The structural June low taken out in the equity markets, which, by the way, have held by a hair. A lot of people believe that means that there would be one further leg down, and then all of a sudden the markets will magically rally. I do not know that by any means. Again, these are unprecedented times. We could see something more along the lines, and it's not why I have this up over here for you. The reason I have the NASDAQ chart up over here is for going forward. We're going to talk about what potential expectations could be for after the halving. By the way, lots of love to you. If you're here and you've had the opportunity already to go ahead and hit the like button, thank you so much for the love. I really appreciate it. Crunk, yeah, again, now we're going to talk about risks, right? And what happens if we were to see some type of nuclear reaction coming from Russia. I mean, it could get dark, and it could get dark very quickly. We could see not only a breakdown, but we could see a breakdown that lasts further and longer than 2024, right? You have over here, by the way, let me start back and just talk about first what 4-year cycle expectations are, and then circle back to worst case scenario, just so that you have it in your mind, because a lot of people right now, and again, I do not embrace 4-year cycle behavior. And what they're looking for is that between now and the halving, whether you think it's, we'll call it end of March, beginning of April, it's dependent on blocks being confirmed. It's not time-based, so it's kind of hard this far in advance to get the exact time, but we could estimate it. It's somewhere around April 2024. And expectations is that price is roughly, we'll call it 50% off the all-time high. That's what happened here in the previous cycle. It's what happened in the cycle before that. And expectations are that Bitcoin would be trading somewhere around 35,000 at the time of the halving. That around this time, this line we have over here, that the bottom will be established and you will see some type of front running of the halving between this period, we'll call it February 2023, and over the next 12 months. We will see some type of, and that could be very pronounced, like that 4x off the low from January to June in 2019, or it could be more of just a gentle sideways drift up. But that's 4-year cycle expectations. And that means from where you are today until then, you have, because price is expected to be higher than where it is today, that you have the best opportunity potentially of a lifetime. This is if you believe in 4-year cycle, to go ahead and accumulate Bitcoin, right? And that for some, that might just be right now, I'm going and moving towards dollar cost averaging. You remember, or if you've been watching, it was in January 2022 that I very cautioned against any type of dollar cost averaging. Instead, talked about building up cash reserves up until May. Over here, May 15th, when we had the crash of Luna and Bitcoin came down towards $25,000, $25,500. At that point, I said, now's a good time to return to dollar cost averaging. And you could see that the expectation is 25,500. Price at the halving should be right around there, above there, $30,000, $35,000. So if you have the opportunity in 4-year cycle behavior to go lower and for longer until there, that is going to help your overall cost basis come down. It's a welcome gift. You should be embracing it. You should be really happy about it. Now, I wouldn't. I don't think that's what's going to happen. I don't think that we're seeing 4-year cycle dynamics play out. TXMC Trades put out a thread yesterday or the day before yesterday on the why and the specifics of why we would not or should not see 4-year cycle play out. But we will have, I think, some type of psychological behavior playing, investor behavior. And there is going to be a significant cohort of investors who are going to be front running it. Regardless of what's taking place and why it's taking place, you will see some front running take place. I think that's very important. So the risk of the 4-year cycle and actually the dynamics playing out come to really the supply and demand dynamics after the halving. And if you're not seeing actually, because the miner's reward is cut in half, in the past, miners who were confirming the network would need to be selling their Bitcoin onto the market. And at this point in time, there's a lot more players involved. There's a lot more selling of Bitcoin taking place regularly. And there's also a lot less miners who are in the need to go ahead and sell their Bitcoin. But if you want to read the specifics, go to TXMC Trades. What I'm saying is after the halving, you might not have that supply shock taking place. And then that means that you might not see roughly 6 months after the halving price testing and or making new all-time highs. There's no given that price makes a new all-time high after the 2024 halving. It's going to be largely dependent on the macro landscape. If you saw Stanley Druckenmiller has recently talked about the great Stanley Druckenmiller, 30 years in a row of 30% or greater returns in the markets, as well as being the architect of the trade that took down the Bank of England. Stanley believes that over the next 10 years that there's a good, strong chance the markets go sideways. We've seen the markets go sideways before. It was coming off the dot-com bubble. Now, one significant difference, I don't have a crystal ball. I have no idea. Symmetry. I have no idea. I don't have any type of expectations. I want to talk about it all though. So let me go ahead and talk about that with you. Because whether or not Bitcoin makes a new all-time high before the halving or after the halving sincerely depends almost completely on central bank policy, the Federal Reserve policy. Now, it is true. Between now and then, I did not expect a country to go ahead in 2021 and make Bitcoin legal tender. And there's always the wild card. Something significant could happen. And whatever that is, I can't even begin to guess with you. But something could happen that could cause, and don't forget, the internal dynamics of the Bitcoin network continues to go stronger all the time. If we look at the 1 year plus hodler ratio, it's currently somewhere around, I don't know what it is, 65, 67%, and it continues to strengthen. And that's an amazingly good sign. It's actually what caused Stanley Druckenmiller in 2021 to take a position, 2020 to take a position in Bitcoin. He couldn't believe that during the bear market that type of internal network health continued to display itself, and it continues to only get healthier and grow. It's possible if we saw some type of demand trigger, whether it was coming from some type of sovereign fund, some type of sovereign nation, some type of central, whatever it could be, in an instant, you could see Bitcoin sent. The risk is always to the upside. A lot of people don't understand that, but the risk is always to the upside. And I'm not talking right now, as I was talking at Bitcoin in 2020, trading off of 10,000 to 14,000, and then saying, no, hold the position, as it ran into 19,000, almost 20,000, and then pulled back a little bit. And then as it reversed up, telling everyone, no, risk is to the upside. That was momentum trading. That's a lot different. That's a lot different than what we're talking about right now. Back over here, one major thing different is that this bubble that we saw in the NASDAQ, you were looking to price to earnings at roughly an average of 167. By the way, they're closer to 37 today. We're not looking at the same type of bubble as we were looking at in 2000. Now, it's a lot different in many aspects, but it's not the same. This was pets.com era, if you remember. And I would say, and I would argue that today, the Bitcoin network is drastically stronger than it was in the bubble of 2017. Don't forget, the bubble of 2017, why it burst, price went on to not only go ahead and make new all-time highs by a factor of 3x. And it's currently coming off right now. It seems to me to be Bitcoin doing Bitcoin things, but being that what we're looking at going forward is a strong signal that the macro runs the show, it is potentially possible that you see some type of nature, whereas you see the sideways price action occurring, right? Now you see, by the way, off of the lows, and by the way, one more low does not mean that price all of a sudden magically bounces and the bear market's over. We could see, and whether or not it was because of things mentioned, something like, Luke, big shout out, if it was something like things escalating over in the war in Ukraine with Russia, if tactical nukes were used, if the energy crisis gets significant, who knows what it could be, you could see down and much further down and for much longer. And then you could see a long time for a recovery. And going past 2024, past the next halving, is it possible that we don't, it depends on the macro, is it possible that we don't see Bitcoin make a new all-time high roughly 6 months after the halving or into 2025? Are you prepared right now, if you are a long-term accumulator for Bitcoin, because you believe in Bitcoin as far as your knowledge of the decentralized network, the protocol, and the financial system overall? Are you prepared that if Bitcoin did not make a new all-time high next cycle, that you would continue stacking and being ready into 2030? I am. Are you? And you have to ask that question. A lot of people would give up. A lot of people would capitulate. I don't think that's what's going to happen. What I think is going to happen is that over the next, let's call it 8 years into 2030, that we are going to see a couple of more massive expansions of the Fed balance sheet. I think it's the only way to currently keep the system going. The debt-based fractional reserve system is going to be through major injections. And the last injection of $4.1 trillion, followed by $1.4 trillion of QE for the next 2 years, is going to look a lot smaller in comparison. And the overall thesis, my main thesis of Bitcoin, is that it is a hedge against currency debasement. As you move forward, the only way this system can be sustained is through further debasement. It's not what's happening right now. Right now, we are looking at a period actually where the monetary total is actually contracting. It's not expanding. It's not being debased. that's only going to last for so long. I don't know anything about that. I personally just know that Russia made it very clear that they would, if need be, use it. I mean, CNN. Does anyone really watch CNN? I don't think so. I think I don't think that people watch CNN. That's for entertainment. So anyway, we're gonna leave it there. I wanted to take the next part further. I kind of did a lot of lead up into where we are right now and what could be some further expectations coming into the upside. That it is possible that number one, we could make a new all-time high before the 2024 halving, and it is possible after the halving that we do not, within 6 months or so, make a new all-time high. 4-year cycle behavior, I believe, is no longer. It is true that we did top, according to the previous cycle, after lined up approximately how many days past the halving. But I have to say, I mean, this is where the Fed pivoted. This is where the Fed began tapering their QE purchases. That was the pivot. By the way, the next pivot that comes into the market is very similar to what happened over here. During this bear market, you were looking at rate hikes. You were looking at quantitative tightening. By the way, you were looking at quantitative tightening, why Bitcoin did a 4x. Quantitative tightening was taking place, why Bitcoin did a 4x. It was right here, a rate hike occurred at the very bottom, but it was the last hike of the cycle. And that right there, a few weeks later, became the pivot as the Fed then said, we're going to go ahead and become data dependent, or however they put it. And over here, again, just as over here was the taper, which is the pivot, right? Rate hikes came over here. This is where the rate hikes came in, over here. The pivot was over here. And the next pivot is going to be whenever the Fed moved towards actually the pause of rate hikes. Going forward, I imagine that much like in the 1970s, we see much more frequent rate hikes and rate cuts. Hikes and cuts. Hikes and cuts. And I think that is going to make for much more. And potentially when we talk about sideways markets, or when Stanley talks about sideways markets, I think there's going to be a lot of range within that sideways. I think it's going to be a beautiful market to trade, a beautiful market to continue to accumulate much more Bitcoin and to be able to stack sats for when the eventual move does come. And when I talk about the eventual move, I'm talking about as Bitcoin does. Right now, the adoption during this bear market, it continues. New Bitcoin infrastructure is being built out. Most recently, we saw the NASDAQ offering custodial solutions. The NASDAQ. Just wrap your mind around that for a second. Tell that to your neighbor. They're going to believe, and they're going to think that right now is an opportunity for them to be able to get into Bitcoin if they are a no coiner. We saw BlackRock as offering to their wealthy clients, or getting ready to offer Bitcoin to their wealthy clients. And we see Wall Street entering into Bitcoin. It's a lot different than it was in 2017. The network is a lot stronger. It's a lot bigger. It's a lot more robust, and there are a lot more users. And assuming that, number one, two things continue. The most important is that we see further continuation of the debasement of the US dollar and the financial system. I think that is ever since 1913, ever since the current banksters took over the monetary supply, it's what we've seen. A gigantic debasement of the currency that's going to continue. It's how the system's designed. So number one, we should be seeing, this is something I bet strongly on, that we will continue to see the future debasement of the dollar. The next thing that we need to see in order for this thesis to be successful is further adoption. Adoption continues to be growing. Even during this bear market, the number of new addresses online continues to grow. And assuming we continue to see new addresses grow, and assuming we continue to see debasement of the currency, there is an extraordinarily strong chance that we make it over here into the ultimate market opportunity. And at this point in time, we are going to see the S curve in action, and diminishing returns will no longer be a thing. By the way, we've talked about diminishing returns. We've talked about lengthening cycles. We've talked about the sincerity of Ben, who embraced it, saying, no, I don't think that even if Bitcoin were to make a new all-time high before the halving, that was a lengthening cycle. I think that a 75% drawdown means that we're in a bear market. And I think that, it was very, let's say, astute to be able to distinguish diminishing returns happening over here. But I think going forward, assuming Bitcoin makes it to the ultimate market opportunity, that it becomes clear that we will no longer be seeing diminishing returns. It's just that you're not really able to communicate that yet to the market and the participants because they're not really ready to accept that. They're only able to see what is happening before them, including that Bitcoin right now is off 75%. So at this particular point in time, no one likes Bitcoin and things like that. That's not really that's really neither here nor there. There is one other important thing that I wanted to say, and I can't think of it, so I'm not going to say it. Let's talk about Bitcoin positioning then, because we had to change the position over here on Bitcoin, and that was exiting a short position overnight. It was actually held for quite a long time. It was a trade that was held for 17 days, right? And not only was it held 17 days, maybe 14 days. And overall, why the trade at one point was 5% into profit, it wound up being a loss of 0.26%. And not only that, flipping long. And now the green arrows beginning to shoot off and Bitcoin able to take that long side of the trade. I really, really, really prefer to be on the long side. And at each and every time you see the green arrow shoot off, I much prefer it. I don't really take joy in any time you're seeing Bitcoin and or Ethereum coming off, even when massive profits are made on the short side. It's not something that I'm happy about. I always take delight when we see long side trades shoot off. I'm rooting for Bitcoin on the long side. Ethereum's still holding its short trade though. And I love, by the way, how Bitcoin and Ethereum work together doing this beautiful dance. Don't forget, during this particular time that we just went through, we saw a couple of things happen. We saw, first of all, no one wanting to go ahead and sell into what looked like support. If you're looking over here and you're looking at that, that looks like, oh, well, Bitcoin is coming into support, right? Let me try to make that a little bit bigger. And right there, Bitcoin into support, I don't want to sell that. Right? By taking a short position, a couple of things happened. As we came into the FOMC, right? By the way, into the FOMC, power position, into a short trade, already into profit. It reminds me of what happened to Jackson Hole. In Jackson Hole, we were going into the event short positions. And after Powell came out extra hawkish afterwards, those positions only rolled over further into profit. Over here's the big move up and down during the FOMC. And why a lot of people got whiplashed, why a lot of people trading off the cuff and discretionary did not know what to do next. They were taking the long side, then they flipped short, and they got demolished. We just continue holding, right? Just staying in very easy. And that continued up until here where we had to exit. It's a small loss. I mean, less than 0.5% though. And to be able to withstand that storm, that all of that uncertainty and do it with clarity, that right there is priceless. Knowing when to be in the market, when not to be in the market, and on what side is absolutely conquering the markets. And we flip long over here. I like the hedge on the short side still being open. I like the dance that they do together. This is still holding an open position over 7% into profit. No big deal. You weren't able to take any profit on the short side. It's not about any one individual trade at all. Most of the time, if you find yourself attached to the current trade you're in, that's a sign that you are emotionally attached, that you're not detached, and that likely might mean that you do not have an edge in the markets. Once you have an edge in the markets, all you care about is executing on that edge. You're not really caring about the current trade that you are in. Now, this might roll over. You could see over here that we might roll over very quickly to a short side. If that happens, I imagine that this current trade could even take a loss. No big deal. I just want to be on the right side. It's a momentum strategy, which means when there's no momentum in the market, you're not going to be going ahead and making nice gains. Yeah. Ethereum, again, because of that dance, it continues to get to be able to hold that open position on the short side. It's a hedge. It's protection. I like that. And then if you start seeing continued follow through to the upside, if this open trade winds up moving into profit and Ethereum follows through, we're going to see an exit, and that exit likely will be into some type of small profit, maybe, maybe not. But most importantly, we will continue to be on the right side of the market. I really wanted to point out today the dynamic that we're looking at or talked about off the June low, when you could see the June low and you could see Bitcoin coming down for almost just like the equity markets for a nice pure test. Ethereum did not have that same characteristic. Ethereum has put in thus far a much higher low. It is interesting. A lot of people are very soured on Ethereum post merge. I think that they're getting caught up into short-term price fluctuations, whether it was to the upside. Don't forget, Ethereum provided a nice 52% gain off of the June low to the upside, while Bitcoin did nothing. Bitcoin took many trades, but never got anywhere, never made any gains, right, of note. So again, you're seeing Ethereum on the upside putting in a nice big up move. And then as Ethereum post merge, I don't think it has anything to do with the merge. I think it had everything to do with the risk rally over here being put up, right? This was into the merge, right? And then we saw risk come off hard. That's why Ethereum has also come off very hard. Looking over here at the NASDAQ, we see that price right now is coming right into the resistance, right? This was support. Price came into the support, broke down the support, came into our other line of support, this line right over here, right? Let me just zoom in. So price came into the upper support. It held, rolled over, came to the lower support, right? Broke down, has so far come in for one retest. Did not take out the June low. It has not yet resumed down. It could at any moment. You could see that is a pattern over here that could roll over. Just because we're bounced up in the green today means nothing. And so far, that broken support is acting as resistance. First level that needs to be recovered to have any idea or any potential that this bounce is going to have legs is that overhead resistance. At this particular point in time, we could line up a line like this. And again, not only this one resistance, we got a lot of overhead resistance. One line, two line, and then a third line over here. It's going to take to getting above 11,800 for us to be able to look to put any type of meaningful rally on. Right now, we are breaking down into resistance, and we are just the stone throws off the June low. It does not look good out there at all. What about here on the NASDAQ? You could see over here, my eyes first, my mouse went over to the support, right? And this is where I'm looking to line up. If you follow the mouse crosshairs over to the right, you could see that's acting right as true resistance. Let's go ahead and just get a line in there, right? As we move up, we're watching to see, as we're into that resistance, where we're wrong. Current momentum's to the downside, even though your terminal is showing a little bit of green today. This is coming off a breakdown retest. We're watching out for a resumption down. A resumption down could take out the June lows, and things could get very sketchy over there. The dollar won't stop. The dollar just won't stop over here, and we kind of have a clue of when we might see that is truly acting as that broken resistance is acting as support, right? So we're waiting for a retest above. We've come very far, but because these moves happening on FX right now are I don't know the adjective to describe about how out of control they are, we could see hugely exaggerated moves right now. Although markets usually revert to the mean, I mean, we're seeing borderline disorderly markets occurring right now. I would play it safe. I would not be looking to catch any type of falling knife. If we see any breaks of major levels, we pointed them out on the NASDAQ very clearly to the upside, then we'll have a little bit of idea that the current we called it a bounce. That's all it is. And we could have called it maybe even a dead cat bounce. And I think we might be able to play hindsight analysis. If it rolls over, we'll say, well, this was a dead cat bounce. But thus far, the June lows hold, right? And we had a test of the June lows, and that's what's holding so far. But we're just bouncing off them into resistance. We got a while to go before we begin to prove ourselves. Yields are rising today. Not a good look, not a good sign. And the dollar is shaking it off. Again, the one thing I could point out there that would be really beneficial would be if we saw any type of mean reversion take place on the dollar. If we saw those exacerbated moves taking place in the currency markets, whether it's on the pound US dollar, if we saw, like, you see that happen all the time, where you see like these big moves that come down. You want to see one or two? Like, let's go back and look at the New Zealand dollar, Japanese yen, a trade that we really killed to the short side over here, right? And you could see that, sometimes those moves end like that. What about the Australian dollar, Swiss franc, another one that we really executed hard off of there, right? And you could see things like the US dollar, Mexican peso at the top. And, that could happen too, right? We just looked at the pound, just look at it mentally in reverse. You could see those lows taken out. A lot of people who are trying to be heroes, don't be a hero, make money in the sweet spot, right? So a lot of people here that went long over here, their stop is right there. So you could see something like we just saw inverse on the US dollar, Mexican peso, where those stops are then taken out. And then that's where and I'm just pointed to bottoms. Like, we could see this thing continue to bleed out, and I don't know where it stops or where it goes. I don't think right now, if anyone could correct me on this, please do, but I don't think that we're seeing dollar shortages right now. Don't forget, milkshake theory has a lot to do with dollar shortages taking place, and we saw the milkshake theory play out in true form back in February, March 2020, until the Fed not only expanded the balance sheet, but perhaps even more importantly, to stop the bleed, went ahead and opened up direct swap lines to central banks so that they had access to those dollars. We're not seeing that take place just yet. And you could see over here, you're looking at dollar milkshake theory, shortage of dollars. And I think what we're seeing is energy deficient currencies, right? Europe, Japan, the UK, energy deficient currencies having a really hard time. And then we're also seeing that massive divergence in policy, central bank policy, as we're looking at the Federal Reserve tightening and those other countries keeping more or less a very easy monetary policy. The Bank of Mexico, for example, has raised rates and has a greater rate differential than the United States. So I don't see shortage of dollars, and I don't see that divergence in rate policy. I think it's a little bit more than just simple dollar milkshake theory playing out. I should say it's a little bit more complicated by that, but I'm not going to try to change the narrative, and I'm not going to try to sway people. People really, they like to hold on to what they hold on to. So, great morning. Great to see you. Yeah, so they went Fabio. So this is very worthy of talking about, and very interesting is that they went, by the way, right? They went from direct FX intervention and selling dollars at this particular point, and then days later they've moved towards now actually selling yen, right? And in order to go ahead and defend their bond market. Yeah, I mean, that's why we're looking at a time when, things could get very, very messy. It truly was. I remember having the conversation back in April, May, and June why a lot of people were looking for things to break, saying, I really don't think so. It doesn't look like anything's ready to break. At this particular time now in September, it does look like that. Well, we are on the verge of things breaking, and I no longer would be surprised at all. These things, once we start seeing the markets get disorderly, they get, all of a sudden you get no bid. So be careful. And all as I could say, and honest as could be, like with the greatest sincerity, is I'm so happy not to have to care. I'm so happy to know what side of the market to be on and when. And a lot of work has gone into that. A lot of, you're talking decades of work. You're talking about creating and working with the best possible team you could imagine. And it talks about that team, putting in 5 days a week, 60 to 90 minutes a day of intense work together. It is beautiful to see. So I think that's today's session is a good one. Is a little bit longer. Do we have, potentially, I don't think I could log in right now to Glassnode, only because I'm on live on the stream. I could pull it up like this. Hold on one second. I'll do it tomorrow. We're going to close on this session. Yeah, we could look at that tomorrow for sure, David. It would have fit very well into today's session. There's no question about that. But we're going to call it a morning. I hope you all have a beautiful morning. I hope you have a beautiful day. God bless you. If you're on your way out today, if you're on a mobile phone, if you could take a second here, share the love, hit the like button. If you're watching this on the replay today, big shout out to you. Lots of love to you and your family. Everyone, God bless you. Thank you for being here today, and I'll see you all tomorrow. Just a heads up, Friday, we will not have a session together. We'll be traveling back home to Mexico. There won't be any type of live streams. But until then, until tomorrow, have a beautiful day, everyone. Let's see if we can continue to get any legs on this bounce here today. I would like to see the dollar participate, and the dollar is not yet participating. Again, we have a little bit of momentum here on risk. If we could get the dollar to help out over here, then we could see a little bit of follow through. And that's the world we live in. Take care, everyone. I'll see you tomorrow.